lastly, we jump into non-conforming loans. These are non-conforming not because they're risky, not because they're poor credit qualified, because they don't meet the conforming standard of the government. It could be because the borrower maybe doesn't have the loan size that they're looking for. Maybe it's a jumbo loan size. Maybe the borrower has different types of income stream, but non-conforming doesn't mean the rate's not very good. So the different categories generally of non-conforming are jumbo, non-QM, commercial, construction, or home equity lines of credit. So jumbo loans simply mean that the loan size is above the standard county limit. And in most cases, it could be call it LA, is over 750. In Riverside County, California, it could be over 540. So every area that you guys live and work in has different county limits. And a jumbo loan simply means in most cases that the loan is over that limit. So things to be aware of in some jumbo loans that you won't see in conventional loans is jumbo loans might require your borrowers to have a higher credit score or more assets. So it's not just the size of the loan. Once you get to that large size, that client typically has to have better credentials. Beyond jumbo, you have non-QM, non-qualified mortgage loans. So these loans are very popular these days because many borrowers don't have the traditional W-2 and pay stub that it needs to get a loan. When I first started, back in the day when it was only W-2 and pay stub, there was no option. Wow, times have changed. Now if someone's got bank statements or assets, you can get them a non-qualified mortgage loan because banks are more open than they were before. They're more flexible. So non-qualified mortgage loans allow you to qualify borrowers that wouldn't qualify for a normal, traditional, conventional loan. Next, there's commercial. Commercial is comprised of residential and commercial buildings that are split, or a building that's got 5 or more units. Most traditional banks don't do commercial financing. Some do, but you should at least know what commercial is about. So commercial is generally going to be income property that's going to be a commercial zoned space like office or industrial or agricultural, or it could be 5 or more residential units like a apartment building or a multi-family that's 5 or more units. And in most cases, our banks don't do these loans, but you still need to know how to advise people on how to get these loans done. Next, we have construction financing, which if you're living in the residential space, there are some rehab loans you can do, but most construction financing, like home building, is gonna be outside the scope of your traditional loan. But there are lots of banks that offer construction financing, and these loans are for people building homes or building developments. And lastly, you've got HELOCs. These are home equity lines of credit. And these are people that want to borrow from their equity without touching their first mortgage. And usually these fall under junior liens. It could be a second or even a third mortgage sometime. So someone's got a value of $100,000 and they got a first of $80,000 and they want to borrow $10,000 from their home. They're already at 80% loan to value. In most cases, you'd advise the client, look, you're already at 80% of the value of the home. With your first mortgage, we can't get you any more money out of your home. But what I can get you is a $10,000 line of credit that you can use to pay off your debt and pay off your credit cards. So it's a great tool to give people the ability to borrow money. And I have my team use HELOCs a lot. If let's say someone's buying another property and they want to put a down payment on a second home or a rental or a vacation property, but they're tight on cash and don't want to sell their home, then great, pull out a HELOC on your home and that can be used for your down payment. So HELOC financing is great because you can get creative and help people get access to their cash that ordinarily would all be tied up in their home.